Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, first trading day of June, everything AI. That's the story. Everything AI is pumping. Everybody jumping aboard the AI bubble. It's going to keep expanding. Okay, I'm going to give you my thoughts on everything AI going forward. But first, we always talk about the technical picture. Bullish still. Look at the moving averages. We're above every moving average, trending higher. Okay, very, very healthy. Bull market, technically speaking, don't question it. That's the way it is. Okay. So we always pair the technicals with our sentiment. This is where we're starting to get a little bit worried in the midterm, in the short to midterm. It's at greed, but it went down today to 59. It was 60.61 on Friday, and today we're going down to 59. Extreme greed in the momentum indicator, but again, fear and stock price breadth is at fear. And this is what worries me. Look how low the put call ratio is. A lot of calls are being bought, a lot. Okay, this is why I'm going to reiterate. I still think we correct. Okay, but any kind of correction, any kind of like pullback, okay, will get us into fear very quickly. Okay, extreme fear, I don't know, but there's something that it could easily get us to neutral for sure, and fear, very, very likely, which could like power the next move higher. Okay, because right now I think everything is being powered by AI. Okay, yet people are just blind to everything. Okay, I just think that we need to have some kind of pullback for this bull market to be healthy and to continue. We can't just keep going up like this. I still think we finished the years at a high. I think the bull market is going to last for the entire year. This is very, very strong. But I think people maybe in the short term are getting too exuberant. Okay, I still expect that down move to happen because of too many call buyers, too many euphoria, and everybody piling into AI. Okay, so before we get to AI, there was a macro print today that everybody, I guess, completely ignored, and that is the ISM manufacturing. Okay, PMIs, we always look at that. Look, today, 54. Last month, it was 52.7. So manufacturing is expanding. It was up for expanding for 4 months in a row, and the fifth month now is expanding faster. Okay, perspective. Remember, we haven't talked about this in a long time. Okay, bringing up the 10-year picture on the PMIs. Look, we have to go back to 2022 before we get readings above 50, and it was a declining. We were up to like 60, and then all the way down on a declining move. We have to go even farther to go up from 2020, as manufacturing is climbing from below 50 to above 50. But here we're going down. Last time we saw in 2022 is when we saw, in the 50s. Okay, but in the 50s and climbing is when we saw in 2020. So it's been such a long time. And since 2022, manufacturing has been below 50 with maybe an anomalous month here or there in January 2025. But for all intents and purposes, it's been in a contracting phase up until December 2025. Okay, up until December, so maybe 3 years at least of contracting manufacturing, and now we have 4 or 5 months, and it's accelerating. We're at this level here, the 2020 move higher, or like the 2016 move here higher, coming from below 50 to above. Okay, so this pattern hasn't materialized since 2020, 5 years, 6 years. Okay, so manufacturing is expanding at a faster clip this month. Okay, so people don't want to see that. They just completely ignore the fact that this economy is expanding. It's strange to see. Everybody has these dire consequences about what's happening. We haven't seen these kind of like breadth or whatever, any kind of like negative sentiment out there, and it ignores the good news. Okay, you have to pair it together. Look at this is good news. ISM manufacturing expanding faster, accelerating. All right. So let's get to everything AI. Okay. So, of course, let's go to the AIQ, which is the Artificial Intelligence and Technology ETF. Guys, ripping. Okay, this is exactly what's driving the market. Okay, it's AI stocks. Let's go through some individual names that you guys might know. It's the AI infrastructure stocks. Okay, like Palo Alto Networks. Look at this stock. Okay, ripping on this news. Okay, you see it everywhere. You see it in CDNS. Okay, some smaller ones here. CDNS 400. going to the highs here. Big move. Look, today, just today, like everybody's piling into AI. Okay. We have the Canadian one, Celestica. Okay, Celestica doing great. Boom, approaching the highs after a great move today. Everything AI infrastructure is being bid up. We even had some Sarah trucking industry, although that's not at highs. But look at the past 2 days. Everybody's piling into anything AI related. You have Seagate, whole infrastructure, hard drives, 900. Okay, this company, straight line up. It is the exact same pattern. We even have but the semiconductors, SMH is what we always look at. It's up today, but it's sort of stalling at highs. It's not like the AIQ, the pure AI artificial intelligence move today. ETF is up big today, another 3.5% at highs. Okay, but SMH, we still have the pattern that we mentioned before on the semis, which is still negative divergence. Okay, it's not high enough to negate it. It's still negatively, because we have a higher high in the price and a lower high in all of the RSI and the MACD. So I'm still waiting for this to play out. And I think if semis go down, the market might go down, although maybe not a lot. If other sectors pick up the slack, okay, like this is why this negative divergence, I think it plays out and we go down to bring in some kind of take air out of this crazy move. Although it's still not super crazy. We're still not at extremes. We saw it here. We're not at extremes. And we saw it in the AAII investor sentiment survey last week where bears are in. So yeah, I see it's very mixed. Yet what worries me is this put call ratio. Okay, it still has to. People have to get hit before this move goes higher. Okay, so the everything AI. I mean, I wouldn't buy any of these stocks. CDNS, not at these levels. You don't chase. Okay, I'm waiting for the move is all these AI stocks that we mentioned. Palo Alto. Okay, wait until you see some kind of pullback. It's gonna pull back. Okay, you don't just go up infinitely like this. Pull back to buy. Okay, that's what you should do for these AI stocks. That's my theme, because I'm still expecting this market to sort of correct, even though correct. I don't like that word because correction means 10%. I don't think it drops 10%. Okay, but I think it scares people. I think we might have to get to some kind of fear here. Otherwise, just keep riding what you have. It's going to be, if it continues to go higher, which is the strangest thing I've ever seen in my entire life, great. Okay, we'll profit. But I don't think so. I just think we're waiting for some kind of pullback, some kind of air to come out of this game. Okay. So the next thing that I want to talk about, and the final thing I would say, is gold. I'm liking this sector because nobody's talking about it. Look, today we had a down day. Today I tweeted, or I X'd, that I'm buying more gold miners. Okay, I'm buying more gold miners. You can bring in the moving averages. I think we're close to a buyable point at the 200-day moving average on gold. Okay, I think it consolidates. I think we're getting ready for a summer rally soon. I don't know when. Let's take those guys out. But most importantly, it's the miners that I was looking at, because look, GDX right at support at 85, which is the breakout point, the all-time breakout point. Euphoria here. Euphoria in the beginning of 2026, and now we're cooling off. Bouncing. Look, try to break it, bouncing. This 85 is an all-time high for GDX, back from the 2011 halcyon highs. So this is a big move, a big level, and you want to be buying here. But I think the bigger play is GDXJ, the bigger upside potential, because this is a level here, but it's not. It's just this. It's a short-term level from 2025, of October 2025, the 112 level. Okay, because the all-time level, high level, is 180. I still expect them to go up and break the 180. Okay. Next rally, I think it's very, very likely that we can get up to that 180. Bounce down, meaning that we're going to hit a ceiling because it's going to be resistance, go a little lower, maybe go down to 155 before breaking up higher, and even over 200. That I see it happening. So I think this is a good time to buy juniors in terms of risk and reward. I think there's a good play to be made on these juniors to go to the highs. Okay, like if you guys want to see the monthly chart, it's you can see it clear. These are the 2011 halcyon highs, 180. We have gold at highs or near highs at 42, 43, 4400, and these guys are not at highs. This is a surprise to me. It just shows you that we're still early. Just show you there's no euphoria in this space. So that's why when gold comes in here, let's go to the daily. I think right now this is the ideal time to buy. And I've been accumulating gold miners. But if you don't know which ones to buy, that's very, very risky space to go into individually. You have to know what you're doing a little bit. But if you don't, just buy the GDXJ or the GDX, and do the appropriate risk management. We don't have time to get into that. I mean, we could later, but the point is, this is for me an ideal time to buy, and I have. So let's reiterate: SPY. Everything AI that we mentioned before is blasting higher. We saw a couple of examples. This is Palo Alto, the Canadian guy, Celestica. I have this in my personal account. What else did we mention? CDNS. Okay, Cadence Design Systems. These guys going up. We mentioned Seagate, Tech, massive highs. Okay, don't buy yet. Wait for a pullback before you buy. That is my conclusion on the AI craze. Just wait, because I do think that the negative divergence will play out that we saw in SMH. And if SMH goes down, SMH. If SMH is the negative divergence in the charts, if it does play out, that will be a good time to buy. You don't have to buy it every second of every day. Okay, wait for a good move down, and then you can load up when everybody else has fear. That's how you play. You don't just go. Who's buying these highs? Like SDX. Who's buying here? I don't know. I'm not. We're just waiting. So SPY. We're waiting again until a pullback to buy. All right. Later, guys.